Yes, everyone. Hello. Welcome to another episode of Faith in Home Buying, where I love equipping people of faith for the home buying process. And gosh, it's 2022, and things have been off to a really hot start. And just even from from deals to different changes to even our contract and changes in lending. We're starting off really hot. Today I have a special guest again, one of my industry friends, Audrey Hutton of the Hutton Mortgage Team. Audrey, tell the people hello.
Hey, everybody. It's always such a pleasure to be a guest on your show. I love chatting with you, and your clients are amazing. So love getting good info out there.
Absolutely. No, but thank you again. And this time, so those of you that are on the podcast and being able to kind of view me live, I now have her number situated up there on the top so that you can give a call. We're advancing every time, but that number is 408-426-8755. You can reach Audrey and the Hutton Mortgage Team should you have any type of lender needs. And we're going to be talking about that probably more on the second half on lender needs and some of our deals that we have going on. Some of them are really, really unique, but definitely some information that will definitely help you should you be in certain predicaments or should you be looking for a particular type of land. But first, 2022, Audrey. It's been interesting so far, to say the least, and things have not slowed down again. It's like I'm having another deja vu of 2021, going in from the fall, winter into just about going into the spring. I mean, people, they're not waiting till spring. They're still out and about. But on the lending side, give me a little bit more insight on what's happening in the lending department. Finance.
Yeah. Oh, yeah. So I think that everybody always anticipates that things will slow down a little bit during the fall and the winter time. And I can say that that really didn't happen. I think that everybody, especially with COVID not going away, people are still on the hunt. They're wanting that resolve. So the activity has been a lot. Nothing has slowed down. Then you combine that with kind of a market update with what's going on with rates in the market and things that are happening to kind of spur that activity. So anytime that the Fed makes announcements that they're going to raise interest rates, that always creates a stir. So you have people that might have normally been like, okay, let's take a little break over the holidays, or I don't want to move while the kids are in school, to, hey, rates are going up. So it creates urgency for everybody where they're not going to wait until spring or summer, because they know that if they wait till spring or summer or even fall, wait a year, they're going to be paying, several $100s more in that monthly payment than they would have if they took action now. So it really has created quite a stir. So you're seeing out the gate, literally January 2nd, right after the day. Our influx of clients reaching out saying, oh my gosh, I wasn't planning on doing this, but we really need to get into something before these rates go up. And the lenders have already reacted to the Fed's announcement. And I will say this, it is a pretty volatile market. We've seen increases pretty sharply just over a 3-day period since the Fed did announce that. Typically, when the Fed raises rates, the things that are going to get hit first are auto interest rates and HELOCs. So It's interesting that I think that with the surgence of COVID and just everything in regards to the economy, it is creating rates that you can't really rely on. And I say that because all the normal factors that we would typically use, like the unemployment rate and just trading, how stocks are looking, to be able to analyze and predict what rates are going to be doing, all that is out the window. It's literally what makes people safe, what the investors need to stay in business, because keep in mind, when they're loaning money, and if people are defaulting or if they're out of jobs because of COVID and they get to forbear their payments, that means the lenders are not getting money to lend.
Right.
They're not getting that money back. So that means that they have less money to lend, which means they have to tighten their restrictions because they have less to lend. So it's all of these things that are impacting the market. So overall, what we're going to see is there's a prediction out there. The Fed's going to raise rates at least 2 to 3 times throughout 2022. Wow. I wouldn't be surprised if rates are, low 4s by the time we hit, January 2023, which it's
Wow.
okay. Anything under 6% is
It's still
typically
good.
low in the history of real estate. So take it with a grain of salt. I do encourage people, if you're going to move, don't wait, do it now, because if you know you're going to take action, why pay more, right? So just do it now. And, this is where Tamika really comes into play. Is with Tamika, I feel like the offers that we make, you get them in contract like this because of your negotiating skills and you're just on the hunt and really on top of it, versus when I see people that make 10, 12, 13 offers and they're not making any traction. So it really is who you work with too. But buy now, get pre-approved now, take action now. Don't wait, because you're going to be paying more in interest rate and price for the same house. So it's a movement year. Take action.
Yeah, no, that's good, because honestly, like I'm probably the worst salesperson when it comes to high pressure sales. I just don't do it. But there is such an urgency, and I mean that with all honesty, and hearing it just from straight facts, right? Like it will make a difference. And you are right. Historically, if anything is under 6%, you're good. I think we purchased ours and we were like 6%. No, we were like 4.6 or something like that. And that was actually really good at the time. And that was like 2014.
And they are great rates.
And they are, but it definitely made a big difference when we were able to go in the twos. That's just to be honest. So
sure.
Yeah, no, but thank you for that, because I think a lot of my clients in particular that I've been speaking with and that have kind of dragged their feet a little bit on getting their pre-approval, drag their feet on, okay, maybe I don't want to do this, or maybe I do, but those that have taken the steps in 2021, it's been amazing to see the traction that every one of them got. And even those that closed in December have already seen equity growth in their homes. Across the board, especially whether it be from new construction to resell, it does not matter. I think I've probably seen like even more growth in the new construction, because there's wait lists on top of wait lists on top of wait lists on top of wait lists, for these homes to be built. And these are people, they're finally calling people on the list from a year previous. Not to say, remember we've had a delay, obviously with the ports. We've had a delay with just COVID. I mean, so many different delays on buildings, on homes being built as well. So that has that compacted on everything else has been just bonkers when it comes to people wanting new home ownership. And so you are absolutely right. If you're on the fence, definitely get out there, at least get yourself pre-approved, at least try to see where you're at with your credit, and take this time to get yourself in position. And we'll talk about that on the next segment about, just kind of one of the deals that we have going on, like, hey, it may not be right now, but you have the time and space and opportunity to get things right so that you're positioned well. So use this time to position. If you're not ready to go right now, position yourself, definitely. Not even with that, like, has there been any, I know evictions now are like, kind of, people, are you guys noticing like any more, maybe with rental properties? What are you noticing with like maybe the rental properties, or just, rental, rates, like when people are investors? Have you noticed a change in that sector in lending?
So anybody that's buying an investment property, I would say the investors have gotten a little bit tighter in regards to the qualifications, just because it's a natural consequence, right? If you have less money to lend, naturally default rates are higher. So statistically, if let's say a lender has money to give, if they know somebody only has the one residence, they're going to make that mortgage payment. Let's say if you have two houses and you're struggling financially, which one are you going to let go? You're going to let your investment property go versus the one that you're living in it. So it's just natural. And that's why lenders charge more and require a heavier down payment for investment properties. So that's tightening up. I personally feel like the guidelines are going to loosen up a little bit this year. And more creative options are going to come up. But as far as, the buzz with investors out there, there's still plenty to go around. I would say if you're an investor that's looking to buy an investment property, this would be a great year, because I don't think it's going to go up as crazy sharp as last year. Last year, we saw a 30% increase in real estate. the prediction is this year is roughly going to be around 10%. So the people that bought, you're going to, you got that lump of equity. It's still going to continue to climb, but I think investors are going to be keeping a closer eye on certain opportunities just because they know it's not going to be as insane potentially. But no, guidelines are still kind of lined up, but we'll see probably mid-year things loosen up a little bit more for investors.
And wrapping up this particular segment, talk to me about, because I know that I've been doing a lot of referrals, going kind of, back and forth with you in different states. How has that market been? Have you noticed there's been an uptick of, people over here in the Bay moving out? Yeah.
So this is a unique situation that we're going to be looking back 20 years from now and saying like, wow, yep, we were in that during that time. This is something that the nation has never seen before, where you have such a flexibility because of COVID. Probably, I would say majority of people have the opportunity to work from home. They're looking, which gives flexibility to literally live anywhere that you want to. So we're seeing a huge increase in our business, and pretty much everybody across the board is, if you guys are thinking about either moving out of the area or even out of state, we do lend in all 50 states. So just let Tamika know, because Tamika has her network. But yes, lots of people are moving everywhere, and you still have a ton of people coming into California, and you have a lot of people leaving California, whether it be for retirement, whether it be because, they want to move where their friends have moved. I would say 25% of our business or so is now out of state, out of California, which is huge.
That's a lot. So, no, that's a really, that's a large number. When we come back, let's talk a little bit more about that. But I also want to get into even some of the deals that we're going through, just to kind of give people a little ins and outs on what to do. So stand by, everyone. Faith in Home Buying. I'm here with Audrey Hutton of the Hutton Mortgage Team, and we're going to be talking a little bit more about just some industry deals that we're involved with, and some hopefully pro tips to help you navigate. So stand by. Faith in Home Buying, equipping people of faith for the home buying process. All right, welcome back. I'm here with guest, my industry buddy, Audrey Hutton of the Hutton Mortgage Team. Audrey, how can people contact you? I have the number on the screen too, but how can they contact you?
Yeah, super helpful. I love that. 408-426-8755. And you can also find us online, huttonmortgageteam.com.
Awesome. And check her out on Instagram too. She does a little Instagram stuff as well.
I need to get with
Hutton Mortgage Team, right? We're going to pull her out on that. But so we left off with talking about people coming in and out from out of state. You know what? Is there a particular state that you find that more people are moving to than others?
So the most popular states that we're seeing is Arizona, Texas. We have a lot of our New York clients moving to Florida.
Interesting.
So there's some East Coast movement. But yeah, I would say Texas is definitely a hot one. We've seen a few pop in Kentucky. We've had a few people kind of move over there. So some of it just depends on where people's families are too. So we're kind of getting a pulse on that. Why are you moving? Are you moving because you're connecting with family or friends, or are you moving to literally because you're going to start a new life out there, and also job? Before, people only moved really because their job was transferring them. Now people are moving and asking their jobs, hey, are you okay if I move? Will my salary change or stay the same? People are making that movement, and it's driving the employers to accept it because they can have that flexibility. So it is really interesting to see, what motivates people.
Yeah, no, I'm glad that you brought that up, because have you noticed also, and this is something that I know just down the pipeline, maybe they haven't started implementing now, but your taxes, obviously coming from California, working in a different state, and being able to you still get the same salary or income, isn't there something coming down the line where you're going to be either taxed because you're doing that and living in another state, but yet working in California, or they're going to adjust your pay structure? How can that affect people?
Yeah, definitely. And that's why, when we do pre-approve people, if they're buying out of state, we are giving them a heads up that their employer has to be on board to provide what's needed. So We have one, for example, right now that we've been waiting for 4 days for the employer to get back to us to say, yes, you do have permission to work remote and your salary is staying the same. So it's all up to the employer. So it's really important to have a conversation with your employer ahead of time before you have an accepted offer, because if they can't give that information and confirm, if you think of it from a lending standpoint, no lender is going to stick somebody with a payment they can't afford. That's just setting the buyer up for failure. It's just not fair to the buyer. It's a protection for you. And I know some people are might have that desperation of like, oh, just say, whatever. And it's just, you don't want to take on a payment if you know that you can't afford that. So it's really important. Have that conversation with your employer, find out the options. Will they keep your pay the same? Will they adjust it? Can you work remote? Those are the three main questions. And if they say yes or no, at least right? We have one client that's literally job interviewing because they didn't get the answers that they wanted. So now they have 2 offers and they're higher than what they were before. So it ended up being a great move, and now they're getting what they want. So it's just really lining things up. We don't want you to move and then, not have the same pay and be shocked with that information. So we want to just smooth transition. Yeah.
I mean, well, that you just gave me one other little thing to make sure that I do talk with my my buyers about, because that's huge, and even my sellers as well when they're purchasing on the other end, because I didn't think about that. Like, hey, they're going to be asking these things. So yes, those that are looking and waiting to buy, you definitely don't try to, you can't, I don't think you can do this, stealthily or like ninja wise. I really do think you're going to have to let everyone on board know that, hey, this is what I'm going to do. Now, does this make a difference if you're traveling just out of state or if at a distance from where you are currently
It's regardless. Yeah. And that distance has changed. So let's say in California, for example, even a couple of years pre-COVID, people started commuting, right? People that were working in Silicon Valley, they started buying in Sacramento. People literally drove 2.5 hours a day. They would drive down to San Jose for an hour and a half and then drive back. And that wasn't common 10 or 12 years ago. So as the job market shifts, underwriters have to get more reasonable. If 15 years ago, somebody was trying to buy in Sacramento and said that they were living in a home in San Jose, you would never get approved. That would not get approved. 5 years ago, it became so common that as long as the employer validated that, yes, I'm aware that our employee lives in San Jose and drives an hour and a half every day each way. It's all about the validation, right? If everybody's on board and everybody agrees, then it's good. But what would be a huge red flag and you wouldn't get through is if the client says, oh yeah, I can work anywhere, I can work remote. We contact the employer because we have to verify employment. And the employer says, no, they can't work from home. They come into the office every day. And why is that a flag? Is because that's an indication that the buyer is actually not putting truthful information on the application. If they're required to go into work every day, then more than likely they're buying this as an investment property. So it's just all the checks and balances of everything.
Wow, no, that's really good to consider. That's going to be on my checklist. Agents, if you're listening, that should be on your checklist too, of questions to ask your buyers, because again, that may not be something that comes up. That may be in underwriting. It may be at the end when, and especially because we're doing offers, a lot of them non-contingent, right? Yeah. Especially over here in the Bay Area. That is one thing that you have to get on board and have to understand, because that can make or break your deal, and that can affect your earnest money deposit on something like that, on just doing a job. And that's usually at the end too, doing a verification of employment. Like, I'm employed. That little extra caveat can make the difference of you in this deal falling completely apart. And
making sure the employer is, because like the one that we have going on right now. So as a lender, we vet this. We tell them from day one, here's what you're going to have to provide, and everything's good. So that employee has to have a really good relationship with their employer, because even if that is their situation, we still have to validate it. So we're just not hearing back. So it's just that relationship. So we do vet that out. We're very upfront with what the clients have to provide. A lot of lenders don't though. So I would say any realtors out there, or if you're a lender, if you have a lender that you're working with and they're not asking you those questions, ask. Just reach out to them, ask, just say, hey, I'm not sure what I'm going to have to provide, but just so you know, this is my situation,
Yep. And have that conversation going. It's good for you too. Just like you said, this may be something where you're like, you know what, I'm going to shop around, for a different job in order to make sure that I can actually do these things. And like you said, with the other person, it actually was in their best interest in order to do that. Yeah. And okay, well then talk about that. I know we're going to go into the other deals, but talk about that. So if you do find out that your employer is not okay with being on remote and you're not in contract, hopefully, and you do, I know, right? And then you do find another job that provides an offer that you make more money, at, and they're on board with things. Now, then how do you, can you do that? Like, what do you have to prove? You can switch jobs in the middle of, and or how long do you have to be there? What do you have to provide? Is it just an offer letter?
Yeah, that's a great question. So I'll kind of preface it by saying that the government-based guidelines is it's okay to change jobs as long as you stay in the same field and the same position. So if it's a lateral move and you're doing the same job just for a different company, then that is perfectly fine. They usually just want to see your offer letter so that they can validate what your pay is. And then they're going to typically require one pay stub before closing, because that one pay stub will validate that they are paying you what the offer letter showed. What you have to watch out for is your pay structure. So a lot of people have a base, and then they have commission or bonus on top of that. And if you've been at your employer for a couple of years, the lender is more than likely using all of those things: the base, the bonus, commissions, overtime, night differential, all of that. If you change jobs, all of the extras go away. Only your base salary can be counted, because it's a completely new employer. They cannot vouch for if your commission, overtime, and bonus, everything will remain the same. So just be aware of that. So you want to make sure to really chat with your lender in detail to say, okay, here's all of my income now. Work with your lender to see what the lender is using for income, so that if you change jobs, your income is not going to be impacted. Because even though you get that sign-on bonus or you get that guaranteed commission, it's not going to be accounted for by moving companies. So you have to make sure you still qualify with just that base pay. So if you're going from guaranteed salary to guaranteed salary, you're fine, right? If you're going from bonus or commission or fluctuating income, then you could really heavily be impacted.
Wow. No, that's really good insight in order to that's definitely going to be in my little had to ask. But speaking of, just of deals, we have one interesting one in it, and land has been that we have about two more minutes left. But when purchasing land, I think it's the beautiful thing, home and land. And because that's a big thing that I know that I'm doing a whole lot of, like, with a bunch of land, houses on it, but it's just a bunch of land on it. Like, what are some common things for people just to really consider when looking at large acreages of land?
Yeah. And I have to say kudos to Tamika, because with the client that we have, it's like, talk about a perfect fit. I mean, this is where you're going to see a lot of realtors will not put the time and energy, but you have this family that kind of knew what they wanted, beautiful family. And it doesn't matter how far away it is. Tamika's like, perfect, found this for you. So I'm
2.5 hours away.
I just kind of look at this. I'm like, of course she did. Of course she found it. Okay, here we go. So when you're looking at land and pretty much anything, just keep in mind, the government has base rules. And so if the property or the home doesn't fit those base rules, we're kind of looking a little bit out of the box. So this is going to be unique to each situation. But then you have lenders that take those government rules and they say, yeah, that's okay if they're allowing that, but we're not comfortable with that. So this is why you're going to get a different answer every lender you talk to. How we work is we have no overlays. So if the government's okay with it, we're okay with it. So in this land situation, you have a unique property type. So if there's anything other than the standard single family house with a base, things going on with it, you're going to have subject to individual situations. So for land, there's actually no minimum. So you could go find a 1 million acre property and you can technically buy it with a normal conventional loan, but it has to be looked at, and not all lenders will look at that. So we just want to get the details on the property, and we'll take it from there.
Exactly. Yeah. I wish we had more time. We'll have a whole nother episode in talking about that, because I think that's cool. But thank you, everyone. Tamika Ellsworth, Faith in Homebuying, Audrey Hutton, thank you so much. Equipping people of faith for the home buying process.
Absolutely.
That's okay.
Sorry.
I know. It's okay. For the home buying process. Stop the recording. Stop.